Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 8:46 p.m. Eastern Standard Time here on the East Coast, New York time. It's day before Valentine's Day. Happy Valentine's to all of you and your families and your significant others and your puppies and your kitties and whatever other animals that you have in the house. It's the 13th of February, 2018. Week after the week that rocked the financial world. This session is a free webinar available to all members as well as to anyone out there who'd like to visit the Clueless Day Trading channel, learn the realities of what happens in U.S. financial markets, and learn the facts and the reality, not the fake stuff that's propagated out there by other trading services and by the media. Session will be recorded and uploaded to the YouTube channel, as I mentioned, and do tell your friends and colleagues and whoever might be who's interested somewhat in learning about our markets and about investing and trading to review them, and hopefully they'll join us as members. Full disclosure, this is purely for financial education, not for any solicitation or advice. And we're going to have a quick, fast review of technical charts, a few words of what's going on, and we'll wrap it up within the next hour, if not earlier. Okay, let me begin. A couple of important points that I always make, broad points. If somebody's following my tactical charts through good, bad, and absolutely ugly markets, okay, on a real-time basis, every single aspect of the market, what's going on, what the charts are doing, where the markets might fall, where they might rise, is shown in graphical representation in the form of precision tactical charts, as I like to call them, which they are. And honestly speaking, no webinars or updates or videocasts are really needed if you really think about it, because what I post on the real-time private Twitter feed, which is accessible to all paid members and free trial subscribers for a week, shows every single movement in the market on a real-time basis. So if anybody bothers to really care to keep an eye on the charts that are being posted, keep another eye on their screens when they have access to it, then they know the whole story. It's really as simple as that. So these webinars and updates are done to reinforce the understanding of my work and content that's presented, that's helped guide all my members through extremely difficult times, good times, bad times, terrible times, and significant amount of powerful winning trade alerts are given on multiple stocks, on market indices such as the S&P 500, Russell 2000, and in some cases the Nasdaq 100. And there's really not much I can do. In fact, the fact that we have charted, and you're seeing that in the background right now in the form of one of my most powerful trading charts, which is the E-minis, the ES, the S&P 500 futures. This tactical trading range was drawn pretty much right after we collapsed on and hit the support at around the 25.30 level, 25.26 level or so, 25.27 level last week. And this box was drawn to put a structure on the intense volatility that grips the market on a minute by minute and hourly basis throughout the trading day. So if anyone's really looking to be an active trader, or even a non-active trader striving to hold on to their positions, wondering whether they should hold on or they should bail or whatever they need to do, these are the charts that keep you in the trade and make you the money when we have 1,300 plus point reversals on the Dow Jones Industrial Average since Friday afternoon, right here. And everything is graphically represented in an extremely precise structural form for everyone to see, as I'd like to say, to understand, to follow, to act on their own decisions, to act on my alerts that I'm suggesting, and profit from it, or minimize their losses, whatever the case may be. So one thing we have learned after last week and this Monday when we hit the lows this Monday was the past Monday. This is the 13th. Yeah, past Monday when we hit the lows, the first low on the 5th, is that markets are vicious beasts. Whether they be a volatility trade, shorting the volatility, the VIX trade that's gone wrong, or whether it be high yield bond yields moving higher, putting some jitters in the market and things like that, the reality is that these markets are absolutely held hostage to the algorithmic high frequency trading black boxes, what we call algo HFT programs that are run by a large number of institutions and run by a very large number of hedge funds. So what you guys and what we are doing, not you guys, we're all doing that, is we are basically trading against the machines. And without these, please, somebody please mute the mic, please. I mean, because there's a lot of feedback coming through. So bottom line is that if you're not being a tactical trader, I don't care what you think, but I know one thing for certain, and that's the only thing I know for certain. You're not going to survive these markets. So that's why traders quit. For no fault of anything but a fault of their own. Because I'm not saying it's easy. In fact, it's very difficult. And we all get whipsawed. But the fact remains that if you don't have a tactical representation in the form of these charts that you are following and understanding, and then my comments and my guidance that I put out there and my suggestions and my predictive analytics telling you that, okay, this is a high probability this is going to happen, case in point today, case in point since Friday, okay? And case in point last week, that this is where the markets can head to. This is where these are levels you should be looking to take down your profits or taking down your long exposure or putting out an intraday short, which we have done several times in this massive sell-off that we have encountered. And if you're not doing that stuff, you're finished. And I speak the truth. The truth, like they say, shall set you free. It's not going to sound good, but it's there to help. If I keep on encouraging the bad habits and the deficiencies of human retail traders, such as yourself, and I'm a human retail trader too, but if I keep on encouraging and just coddling your bad habits, we're not going to get anywhere. And on a moral basis, I can't do that. So I'll just keep on doing what I'm doing, and you have to do what you need to do. So saying all that, we have come through one of the most critical periods of the market, a 12% plus correction, and much higher, in some cases 20% plus on individual stocks, right just within a matter of 1 week or less. It's extremely important that anybody here tonight review the previous webinar that I put out there over the weekend. I believe it was Sunday night. Whether you attended or not doesn't matter. It's all there for free viewing on the Clueless 8 Trading YouTube channel, because this is an extension of that particular webinar. We're going to look at we're going to look to see where we have come from the time that I said what was going to happen. And what I said was going to happen, and I'll take full 110% credit for it, happened. The market had a severe bounce. The market's heading towards a level where it's going to hit a massive resistance, and that's where the markets are going to sell off again. Now, whether that sell-off will culminate into a triple bottom all the way down into the low 2500s, I don't know yet. Is it possible? It is certainly possible. However, it's a low probability trade that we are going to drop another 1,000 points from here and just give back everything that's been taken, that we have, the market has rallied since Friday afternoon. But we shall see. Okay. Friday was the 9th. Yes, good. Just had to keep these dates straight. So, in summary, these markets have fundamentally changed. Now, the average retail trader, including many of you, are finally realizing, it has finally dawned onto you all, that all this talk about algo HFT, tactical robotic trading, and the machines dominating the markets, you finally accepted it. The acceptance phase has come. And you realize you can't run away from anything. You can't hide behind what you think or something will do, where you think the markets are going to go, up or down. It is all predicated to a high degree of probability, up and down, by following these tactical charts. It's really that simple. And now that the acceptance has come about to almost everybody out there, some will strive to change the way they trade, the way they manage their positions, trade management we call it, and some will remain as stubborn as ever like before and rely on their so-called hunches and the news coming out and the CNBC and what they have experienced in previous years and stuff like that, and they are the ones who are not going to survive. So if you want to survive and prosper, it doesn't matter whether one got hit or not. We all did, one way or the other. Even though we had remarkable trades in the midst of this volatility, overall we all got hit. Since, till about Friday. But the point is, it is how much you make back. That's the question you have to ask yourself. Now, whether you're short of funds, whether you can maneuver around, I understand all that. But that's not really my business. That's yours to figure out how you're going to do it. That's it. So the markets now we know the reasons why. What happened? All that is explained very clearly on my Sunday night webinar. I'm not going to repeat that again. Now that we know the reasons, now I know that there was no massive breakdown within the overall credit markets and the pillars of what holds our U.S. financial markets intact. So that gives me a sense of relief, because at the time this was going on, we knew it was a volatility-induced trade, but why that volatility was shooting up, the VIX was shooting up to 50, no one really knew. It couldn't have been just a sharp rise in bond deals. That was one reason. But now that we know that a significant amount of these hedge funds or a good number of them blew up because they were all crowded into a small room with hundreds of billions of dollars shorting the VIX. God knows why. I never shorted the VIX. I always went long the VIX at certain times. But then they shorted the VIX and then they blew up as the VIX just exploded higher. And that vol trade basically exploded in a huge ball of flame, of fire, whatever, that caused the disruption in the markets. Now that we know that, at least we can start to repair. And that's the repair process is where we are right now. Okay. Let's get into the charts here because I don't want to spend the whole night going over the macroeconomic stuff and all that because all that is explained very clearly in my previous video. So at this point, this particular box that you're looking at is where the market are going to trade for the time being. Okay. Today alone, the market traded within a 100-point range, or more than that, probably like a 150-point range during the day. The technicals underneath the surface were still telling me, and that's what I kept on putting out there, and highly suggested for your own benefit that all of you go ahead and review every single chart and the comments that I put through, because my comments are not like, yo, we're going higher. My comments are technical comments as to what I'm seeing, put in a very succinct, straightforward level, where I'm mentioning that the stochastics are still suggesting higher because the crossover is up, blah blah blah. So if somebody cares to look at it, they'll know very well that my belief was that the markets were going to rally today, and that's exactly what happened because I was following my charts. That's it. Are charts 100% perfect? Of course not. Nothing is. But it is probably the most useful tool you're going to use in these type of markets, and these type of markets are here to stay, and they will increasingly become more robotic and machine-like going forward. That I can assure you, and I've been saying that for years, and now that you guys have finally come to accept it. So the reliance on structural charts is going to become of critical importance, otherwise you're not going to survive. Yeah, you're going to get lucky breaks here and there, but if you really want to be somewhat consistent, you got to learn how to understand these charts and manage your trades. So saying all that, this is the trading range. That's why it's called the tactical trading range. Not that difficult to understand. We have a very broad downward downtrend channel. These are the two big thick lines here, and these and then you have the big breakdown level right there. I put it here because that's a level we managed to get up to on the 7th, and that seems to be a formidable resistance. It all happens to be where this downtrend line from the highs, from the all-time highs, intersects right there at the 2730 level, approximately 2735 or so on the S&P 500. Because on the E-minis, you just have to add, as I've repeated several times, 4 or 5 points to the value of the E-minis, the futures, to arrive at the SPX level. So here, as you can see it, we have a wide downtrend channel. I said before that once we entered this channel, we need a sharp bullish engulfing candle. That was this afternoon. Let me zoom in now. Right there, this one. This is when the market basically went into the green and started to rocket up, helped by many large companies such as Apple and other companies which were basically pushing it higher, Boeing and stuff included, Lockheed Martin, the Dow components. And so now we are within this, we are back in this downtrend channel that we fell out of on the 5th. So what does this mean to you? Well, it means a lot to you. If you're trying to figure out, scratching your head, well, what the market going to do now? Yeah, is it going to go higher? Is it going to go lower? Well, it's right there in front of you. We're in this channel, and it looks likely, and it doesn't happen in one go. But it can happen. But I do know one thing, that when it starts going, it just goes. Just the way when the market started, that's what machines do. When they start selling, stops get triggered, everyone panics, and this type of stuff happens. Okay? Now, this type of stuff doesn't happen. 1,000-point drop in the market does not happen in the market too often. In fact, it happens maybe once, and and possibly twice in a year. Given the enhanced volatility in the market, maybe it's going to happen twice or 3 times this year. But the first one that happened last week is over for now. However, we're always prepared for anything else to happen. There could be another massive macro trade, like this particular one was shorting the VIX. There could be another one that could be lurking in there that some hedge funds have gotten into, and as they start blowing up and they panic, well, we could get another one of those. It just doesn't randomly happen. How about that? Okay. So when you listen to all these guys on other forums and StockTwits, other trading platforms and stuff where they're commenting, they just said, that's it, here we go, we're going to fall another 500 points. I mean, they're just talking bluster. Number one, maybe because they don't have any experience. I've gone through multiple flash crashes in my career and big crises in the market. And maybe they're just, well, the only reason they talk like that, to be honest with you, aside from experience, the fact they're all emotional freaks. And they're all just looking at prices. We look at the whole picture. So saying all that, now that we're in this channel, and I have this nice little representation of this oval with a green arrow, the best we could do between now and, let's say, going into the first part of next week, or even to Friday, we could make, if we make a monster move, the most we're going to get up to, and that's quite a bit, is up to the upper end of this downtrend channel. It's pretty clear for everyone to see, and I've marked it as clearly as possible. I don't know what else I can do. Okay? And that's what we call the bear kill zone. And all it does is take us to the downtrend line, this one, and takes us to the upper end of this tactical trading range. So if somebody wants to basically lower and run with all their profits, or lower their long exposure as we get closer to that level, well, that's exactly why I'm putting these charts up. I'm not going to tell people on every single stock when they should sell. It's because it's all represented on my charts, on my stock charts that I put out there with the arrows and all that stuff. It's up to them to manage it. This is not a ditto trading service. This is a smart, intelligent, precise trading service where things are put in place for you to see and for you to manage your book and your money. Simple as that. And we have had huge winners, even in the worst markets. And I'm not going to sit here and list them either. And we have been caught in trades which have gone upside down because of the sudden drop. And that's unavoidable. So, we are right now at let's see, 2766. Let's say, I'm sorry, 2660. What does it say there? 2663. So if we get a really, really powerful move and we get to 2742, so we get 2742 and 2660. What did I say we were at? 2663. That's 80 points. So we got roughly another 500 points or so. Let's say 450 to 500 points till we exhaust the upside energy and the market basically rests back a little bit. Doesn't mean that it's going to have to fall all the way, 2,000 points down here. I'm just simply saying that would be a very powerful resistance. It also happens to be that if it's 450 to 500 points, it takes us into 25,000 plus Dow. Given the fact that we closed at 24,640, psychologically speaking, the market seem to like round numbers. So 25,000 now, whether it be by Friday or whether it be, I doubt if it's by Friday, whether it be the first part of next week, one way or the other, in my opinion, given what I see, and I'm going to show you the daily charts, which are indicating a wide turn. Remember, this is a 1 hour chart. This is a trader's chart. If they're trading the SPX or they're keeping an eye on this to know when to sell other stuff because the markets are going to get hit, stuff like that. So, once they hit resistance level. So this is the trader's chart. But the daily charts are starting to show that slow upside turn, which is a good sign. And I'm talking about the internals. So that's pretty much all I have to say about this particular picture. Somebody called B just stepped in. Who's B? Just asking. 1 second, guys. B, could you identify yourself, please? Bear with me. So B decides to leave. Okay, great. All right, not a problem. So that's it. Any quick questions on this particular trading chart that we use to on a very precise level to see what the markets are going to do during the day? No? Yes? Okay, good. All right. So now we're going to take a look at a more important chart, which is where are the markets going right now? And this chart is the daily of the S&P 500 futures. So basically the market. And we have this green line here, which is a gap fill. This was the gap fill. Now the gap was filled here, but I'd still use it as a gap fill zone. So the market looks like it wants to get, and it was getting very close to the gap fill. It actually got and almost touched it yesterday before we woke up this morning, and futures were down 14. Didn't matter. Still had a great day. In fact, our stocks had a phenomenal day. Even though futures were down, 16 at the open? Means nothing. So what we see here very clearly is a very, very powerful double bottom, the 25-30 level. I'll tell you one thing, guys, on the bearish side. If for some reason we break down and we hit this level again, chances are we're not going to hold this very, very powerful 200-day moving average and powerful support, these hammer reversals at 25, 28, 25, 30. We're not going to hold it. I'm telling you guys right now. And if it breaks, it's going to fall very fast. And if it falls very fast, that's 100 points here. And that 100 points is roughly 600 points on the Dow. Okay? So be prepared. If we get another flash crash, we seem to be getting quite a few of those, given some of the tsunamis that are happening. And remember, tsunamis start from under the water, right? On the seabed. That's where the tremors start. And then they rise to the top. So when they're happening underneath, sometimes we don't know why they're going on. So if those tremors start, and if we, just giving a forward warning that if we hit this 25-30 level again, and I start to see these type of candles develop, I'm going short and staying short till, again, you can't stay short too long because every time if you try to stay short, you died because the market's reversed so hard. But if we get a bearish engulfing candle, a candle of this size, which goes below this red line here, which is a major support level too, then the chances are extremely high that we're going to come and retest this level or even break it. Anyway, I'll certainly be, I'm always on the ball, explaining to you guys what where we are and what I think is going on. So you'll have to decide, what do you think? So anyway, so this gap fill is here at 2683, and I've said this several times today, and 2670. So we are close to that. So 2683 would be this dotted line here, the upper end of the gap. 2683. So that's about 20 points from here. So 20 points means we have another 120 points or so from here to here on the Dow before it hits, again, another major resistance. Because once gap gets filled, either it shoots straight up, and if it does, then what would be extremely bullish, remember, these two lines are not drawn for fun. This is an uptrend line that was broken right there. This is the second uptrend line that was held. So if this if there is a powerful move, and we basically and things can happen like that, because I've always said, and I've seen this happen all the time, almost 100% of the time, that patterns get, every action has an equal and opposite reaction, right? Newton's law of motion. So this action, if it has an equal and opposite reaction, then I'm not saying that it's going to go all the way up. But what I'm saying is we have a fair shot to maybe get towards here. This is the downtrend line. So that brings us into that 2760 area that I showed you on my previous chart. So this downtrend line is extremely powerful, but that's 2760. That's that's 100 points from here. That's what I was talking about earlier. 100 times 6 is roughly about 500 to 600 points or so on the Dow. And then it's going to hit some formidable resistance. If things go really crazy on the upside, and we have to be prepared for this, then we can move up and complete this pattern right there. And that brings us into the 2800 level. Okay, that would be, in my opinion, a full-scale pattern completion, number one. Full pattern completion, obviously, would be a retest of the highs. Is it possible? Hey, anything is possible. Okay, so you know the downside, that if we break the 2530, we're going to cascade down what we call a waterfall decline. It's going to be fast, furious. It might last half an hour, just we have seen some of these. And you're going to see an extremely powerful bounce if we crash into the 2400 level. Very powerful bounce. Just like that. Just the way seeing from here what we're seeing since last week. So so this chart, like I said, I publish these charts, I create them, so I understand everything that's on it. So if you guys have any quick questions, this is your chance to ask me, even though I've explained it several times on on my real-time Twitter feed on my previous webinars. Any questions on this? Because this is it. This is a very important chart. It's a daily directional chart of what is going on. Because each of these candles are not just beautiful colors. They are 2, 3, 4, 500 billion type of moves in the market. Just the way, the market lost more than close to $2 trillion, something like that, on this drop. It is now recapturing back a little bit more than 1/3 of it. So any questions, guys? No? Okay. Now this particular thing here, which is the simple stochastics, is good. It's not great yet. Now, why am I saying that? Because the slope needs to be steeper on the upside. We need to bust a move up into this upper trend, above this upper trend line, and regain back this trend line, uptrend line, because that's where we get, that we take it back somewhere in that 2682, 2690 level on the S&P 500. Because once we do that, we are back in that uptrend. And that when this thing really, starts to move forward. So right now it's okay. It's not great. But then at the same time, this is very comparable. And I said this from the first time that we crashed last week to what happened in August. I'm talking it from a technical level. In August of 2017, we had very powerful drops in the market. Not of this magnitude, of course, but you can see that right there. The internals got down to the same level that we got down to now on a much bigger drop, on a 12% correction. These were like 2-3% type of corrections. So this is very comparable to August of 2017. And you guys might have read that in a couple of the pieces that I put out from some smart technical guys. And I put those articles out on my Twitter feed. I put one out last night, I believe, or this morning. I put one out, I think, last night called The Fat Pitch. Read that guy. Guys who make sense. Guys who don't talk garbage. Remember, there were a lot of dormant bears who said, we knew this was going to happen. They had no frigging idea. They got lucky. Okay? They got lucky. Because the VIX is one of the most manipulated asset classes, and you guys are hearing about it now. You guys know that, hopefully, by now. That there's investigations going on about the VIX trade. Because the guys at the Chicago Board of Options Exchange, no offense meant to anybody, are not in the business of making you money. Let me just put it straight out, okay? I've always said that. Because they're one of the biggest options makers. And a lot of the times, they'll excuse my French, screw you on those options, even when the stock is up, and you're wondering why you're not getting the price you're not getting. Stock opens up big. They don't even move the options for the first 5 minutes. You think that's fair? I think it's borderline, it's illegal. But you can't do anything about it. So is it possible that a bunch of them manipulated the VIX? Oh, yeah, it is. So, anyway, we'll find out. It takes time. So, and it's not going to change anything. Don't expect any fairness in the financial markets. Financial markets trading, and especially trading options, is not about fairness. It's about speed, agility, being smart, trading off tactical charts. That's what it is. Don't look for fairness. This is not for kids, all right? So, so this is looking good. And one of the things that I wanted to point out, which I did point out, that even as we were climbing, we have climbed what? About 1,300 points since I alerted people from last Friday and Monday morning. This particular thing never made a new low, even though we made a low on. This was the low on Friday. We opened up, and then this Friday, and then we this Monday is when we last Monday when we hit that rock bottom. We hit a absolute low of minus 0.63, and this is real simple stuff, but it's very powerful stuff, guys. So when you guys are sitting there scratching your head like, oh, the market, what you're going to do, I hope, you hear a lot of that, and it's fine because I see, I don't blame you guys, You guys think like, normal people. You can't think like normal people anymore. You got to think like a robot. You got to think like a chart is thinking. So I'm just explaining this very simple thing here. So we had a positive divergence here where the fast stochastics made a higher low, despite the fact that we made a double bottom retest and came down to the same low. So even though we came down to the same 25-30 lows and it was blood red on the screen, the internal stochastics were making a higher low. That's known as a positive divergence. Happens with stocks all the time. Now, if somebody was not following this, and I alerted all you guys on this, so I don't need to repeat myself, please. The bottom, and I've said this for hundreds of times in all my webinars and my ACS coaching sessions, then when you make a positive divergence, it is going to play out. And it played out in the form of a massive move up on the markets, on multiple trade alert stocks, as well as the market, as well as S&P 500. So this positive divergence happened over 5 days. It never hit that low. And I was watching this thing. And this is what happened. So this, as I'm showing it, You guys have to understand it and act on it so you don't bail out of trades. You don't bail out of trades. Like my good friend here, Trent, said, thanks for the VIX chart. Excellent chart, because he's keeping an eye on all these different charts that I'm putting across. It kept him in the trade. And he made a nice pile of money today. Because I showed the VIX chart, I showed all these other charts with the candles, and she's like looking at them and he's like, okay, he's getting it. So get it, but get it faster. This market won't give you a time to sit there doing your analysis, what I call analysis paralysis. Stop being an analyst. Like I said, keep your day job, what you're good at. I never said I was an analyst, even though I analyze more reports and stuff, like I've said many times back in my days in Wall Street, for more hours than you guys have worked. So please don't try to be an analyst, all right? Crunching numbers and, why didn't the earnings come up? Why didn't the numbers? Just follow what the price action is. Of course, have an understanding on what the numbers are and stuff, but don't get into that dissective, analytical mode like as if you know what it is. You'll never know what it is. Even the best minds on Wall Street sometimes don't know what it is. Let's move on. This is a chart of the Nasdaq, and it's super powerful. Now notice here the difference between the previous stochastic that I showed you and this one. This one is actually moving nicely. That's for obvious reasons. The Amazons, the Apples, the Googles, the Twitters. This is the Nasdaq. And it certainly is doing a damn good job. Okay? This is the NQ, the Nasdaq futures. You can see that just visually. Here was the downtrend channel, broke out, and it followed through nicely. I'm going to show you a quick picture of the same thing here on the S&P 500, which is basically encompasses a lot of industrials and banks and stuff. The Nasdaq primarily techs and biotechs, right? So look at this here, and look at this here. This one's higher relative strength. Looks damn good. And Apple certainly helped it today. So where can it go? And remember, we don't trade the Nasdaq 100s, right? I've said that a zillion times. We use this as a proxy to see what the techs that we are trading on the other side, how they're going to act. If this is going like this, creating a inverted hammer, then I don't care what techs you're in. I get an early warning sign by looking at this and warning you guys, time to lighten up, time to get out, or whatever the case may be. Take your profits. So keep on watching this one. This is a short-term picture of the Nasdaq 100. I'm watching it during the day to see the, not minute by minute, but like 15-minute. This is a 15-minute chart. But yeah, so I'm watching it, I'm watching pretty much all the time to see if any sudden movements are happening. So far, so good. So far, this is a bull flag. And the best way you can see it is we shot up here, after moving around like that, we shot up here. Now we're moving sideways. So that's a bull flag, bull channel. Now we could come down to the bottom of the channel. That means Apple would be down $1.50 or $2, or Google will be down 6, whatever the case. But that still doesn't change the picture as long as we are here. So that's for me to do, my job to monitor, you guys to look at and understand what I'm talking about. And every little candle, when it moves like that, it affects the front end of your stocks. Okay? So we don't necessarily want it to come all the way down here, because that would be a big thud on the tech stocks and the overall market. It's not a big deal, but still, it still keeps the bull channel intact, because you have this line here, and you have this range here. Now, we have broken above the downtrend line. See the dotted line? The downtrend line's broken. What we would like to see is a little bit of hesitation here, like we saw today, and then a strong breakout to complete the first pattern here. That means Apple will go to 165.5, 166 maybe. Tesla's going to hit 330 plus. Google's going to hit 1070. Price line's going to hit 1830. That's the completion of the first pattern. Look at the pattern. You can see it. Just making it just easy, right? Once it hits this pattern, don't expect it to go straight up and make that, hit where it was back on. Let me see one thing here. So I'm looking at it from where it was on the 7th of February, not even the old high and stuff, which is all the way up here. So I don't expect it to basically bust a move straight up here. It can do that, but we shall see. I'll get into some individual stocks in a second. So before that, let's take a look at one of the most powerful and the easiest ways you guys can trade this market. And if you're trading S&P calls and puts, you don't need anything else. I use Thinkorswim. I use investing.com. Mike asked earlier on, how do you get a tutorial investing.com? Like Scott suggested, I'm sure there are videos out there on YouTube. I'm sure there are videos on investing.com. Have you looked there, Mike? Okay. So there's really not much to learn. I mean, I'm showing you how to use it every single webinar that I'm doing. I mean, it's not complicated, Mike. Okay. So I don't know what you're looking from a video tutorial on investing.com, because it's just simple. And I've just look at my videos and stuff, and then just do it that way. There's really not much that you can learn from a tutorial. I mean, because it's so simple to use. So that's all I got to say. But I'm sure there's some video tutorials out there. So here we have, I'm going to take these two lines out for now. One gone. I'll keep this one. Okay. So here you have the downtrend channel, the same one that I showed you in the investing.com chart. And this pattern that you're looking at is looking, and remember, this is the trading range, right? 27.75. Let me go into SPX. And I am going to let me go on the daily chart right away to show you guys what's going on. We had a monumental, it hasn't happened for 80 plus years. Or whenever it happened, I don't know, I wasn't around. That the market dropped like this in 1 week. And I said this in the last webinar, and now we're revisiting this again. After all that happened, these lines, especially the 34 and the 50-day moving average, they didn't collapse. It just amazes me. That shows that the underlying strength of the market is still there. They're starting to curve down a little bit. You guys can see that. But there is no, and because these are the most important lines, the 34.50 and the 150-day moving average. I mean, I look at the 200-day moving average, but to me, these lines are far more important. The 150-day moving average is extremely important. And this is this line here. It didn't even budge. The market retested it. The market very seldom retests the 150-day moving average. And when it does retest it, let me see. When it does retest it, it creates a significant bottom, short term. And I said this before, and I'm saying it again. And guess what the market did? It plunged below the 150-day moving average, which was very dangerous. But it's just like a coiled spring. It sprung back right there, right over this line. So that's extremely positive. The reason I'm moving these lines around here is because I'm showing where these very powerful moving averages are lying for the moment. Hold on. So you know what we're talking about. So when you guys are listening to some royal idiot out there and thinking he knows it all, at least you'll know what the reality is. Okay, so where's the 5? Where's the yellow line? Okay, 1 second. Trust me, I wasn't schooled, just so you guys know while I'm doing this, I wasn't schooled in like hardcore technical analysis. I know the basics well. I had the good fortune of sitting in some very powerful seminars with some of the best minds in the technical analysis business. Names that you guys see on TV, some are around, some are not. From the late 90s to the 2000s, and then I started just doing it my way. And you have to adapt. I adapted to my style. I started using the basic tenets, and at the same time adapting it to the way I structure my charts. So that's the reason why I say the way I explain it, it's easy. Try sitting in a hardcore technical analysis class with some advanced technical analyst. You'll come out completely lost, dizzy. You wouldn't know what the heck you learned. And I'm not that smart to go there. Okay? I know the basics. I structure it my way. And I mix it with my fundamental knowledge of analysis of the markets, the macroeconomic stuff, and bingo, we have a trading model in place. And that's what I try to share with everybody. So let's take this out. So here we are. So this is the trader's line, the yellow line, which is the 5-day moving average. The 5-day moving average right now sits at 2640. Right there, 2640. So we are above the 5-day moving average. Good sign, number one. Number two, the 20-day moving average. The 20-day moving average is sitting at 2762. Remember, the 5-day moving average will give you the first clear sign when it turns. It hasn't fully turned yet. It's starting to flatten out. But when it turns like this, that's when you're going to see rapid movements of the market. We're already seeing rapid movements of the market, but that will be more of a consistent, confident. The confidence ratio will be higher that you can go to bed at night knowing you're not going to collapse the morning after, even though stuff happens these days, right? It's just a different world. So, but I'm just saying, in a somewhat normalized trading global trading market, you could at least have a higher level of confidence once we see this yellow line turn higher. We haven't seen that yet. It's starting to. It's starting to. Now, we've seen that in the shorter term charts, not in the daily charts yet. The 20-day moving average is lying all the way here at 2761.64. The orange line here, the dark orange, is 34-day moving average is at 2747, and the 50-day moving average is sitting somewhere around 2720. Okay, 2720. So my hunch is, based on everything that I've seen, I don't care what reason the market was down. It's always like that. The market, and I've said this every time, and it's happened every time. Sometimes very fast, sometimes it takes a couple of days, if not a week or so. But it always happens, guys. The market will retest the 50-day moving average. If it fails there again, we're going to get another whoosh down. Okay? Because that means the market is so weak that it cannot withstand going over, cannot break out over the 50-day moving average, like it happened on the 7th, which was Wednesday. We were moving up real fast and furious on Tuesday. It hit that 50-day moving average. That was last Wednesday. I know most retail traders are in total shock and awe and probably in a state of coma. I see no enthusiasm. I see no involvement by most traders, which is fine, which is understandable, which is a shame, if you ask me, because you can make back very decent sums of money, if not a lot more. And if you have a lot of cash on the sidelines, you'd certainly made out like a bandit. So that's just what happens. And then they'll all coming in with all excitement and stuff right when the markets are ready to fall again. It's the same old story. I mean that. Okay, you guys have seen that too. So don't try to practice it like that. All right, try to be early on the sell side and be very early on the buy side. You'll be fine. Seriously. So the 50-day moving average is right now sitting at 2720. Let's call it 2720, 2719. So if we get to 2719 from where we are right now, let's do the math. Let's call it 2719. Take out where we are today, which is roughly 2663. That's 56 points. Taking the lower factorial, that's roughly about 300 more points or so. 300 to 400 points that we have room to move, which brings us up to Dow Jones 25,000. So all the numbers that I talked about from the first chart are matching. So you guys know. So that's it. Now, if we start to see further weakness, which is possible, I can assure you, you're going to see this 20-day moving average crossing below the 34, and that is the first and surest sign this is an extended period of weakness. Does everyone understand that? Yes or no? Yes, no, maybe. Good. So Scott and Trent said yes. Good. I'll take that. So we are, this 20-day moving average, we don't really care, because if I have a directional bet that it's crossing down at that point, then we will be selling rallies very quickly and doing a lot more short trades. But we need to see that indication first, because right now anybody who went really short on a Friday and held it through Monday and whatever, they're just dead. They're dead in the water, right? They're just like, oh, this can't happen. This is all garbage. Yeah, markets can go higher. The world is such a bad place. Blah 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 blah. So we have to be careful. So that's where we are. Now, here's the simple and most powerful indicators. I told you that August, this is the first comparable to August. So this was August of 2017. We reached the same horrific low levels on the full stochastics. That's exactly what we did here. Now, the good part is that we see a crossover. When I say crossover, this is what a crossover looks like. It crosses over. It crosses over. It's the 80-20-10. So it's basically crossing over. If you see the lines cross over on the stows, so that's what a crossover means. It's turning up. It's turning up. What we would like to see is this the secondary line. I believe that's the percentage D line. This orange line also cross over. We have not seen that yet. Once we start to see this crossover, that means we're going to see the 5-day moving average start to curl over. Good to go. You want to jam. You're going to hit the pedal to the metal. You want to increase your trade sizes, and you want to stay long till we hit the big red wall here at the 50-day moving average. That's it. So this is how you stay in trades. This is how and if you stay in a trade, you're going to make more money if it's going in the right direction. The next is let me just show you this on the same thing on the 1 hour. And on the 1 hour, you can see here, this is what traders use. We have an inverse head and shoulder, which is very positive. Here's your head, left shoulder, right shoulder, and it seems to be holding. Okay? The neckline, there is one neckline here at 2680. We want to break out over that. If we break out over the neckline, we're going to 2720 real fast. This leg of the sell-off will be replicated as this leg of a big rally. Patterns almost always repeat themselves. So if you look at this picture here, let me see. Focus on because there has been serious technical damage done to the market, so it doesn't just repair itself. You know, in the old days it would have taken weeks. Now it just happens in hours and a couple of days. So this is what we're looking at. So even if we pull back a little bit more, that's okay, as long as we don't break below the 2620 level, which means 40. We could be down another 200 points and we'd still be okay, believe it or not. Okay, so this is most we can get to is your 150 moving average. That's on the hourly, and that's 2764. So all the numbers are matching as I'm showing you different time frames, because this is real. This is all technical stuff. It's not boring because it makes you money or makes you lose less money. You can't be dreaming and hoping that the market goes higher, because the market doesn't rely on hope. Period. So what's good happening here on the 1 hour chart is your 20 SMA is turning. The yellow line, the 5 SMA has turned nicely, so that's good. What we need to do is to see this orange and red lines, the 50 and the 34, turn accordingly. Once all of them turn, then you know that things are really, you know, starting to heat up. Things have already heated up, but still. So this is what we're watching. We're watching these lines, and this has crossed over. So this is good. That's all I got to say. So now we can take a look at a couple of charts. And all right, any quick questions? Okay. We can't leave this sink or swim before looking at the VIX. This is your hourly chart of the VIX. The VIX is a derivative, right? So it doesn't really move like a stock. That's why the chart looks like this. So the only way, you know, the way I gauge the VIX or predict what we might do or not is simply by drawing, as I've shown a whole bunch of times, I just keep on drawing the downtrend lines. If it goes over the downtrend line or heading towards the downtrend line, then we're gonna, you know, then things are getting rough on the front end, which is the stock market. So here we are. As far as I can see here, the VIX wants to. This is looking like a head and shoulder. Like I said, head. Lots of left shoulders. So the VIX can. We have a negative crossover of the 34 and the 50. That's a good thing. So the most I could see the VIX going to is 20. And at 20, I'm going to be a buyer of the VIX calls. Just the way you have done many times before. And done well. Except now the VIX is a really juicy product, right? It's not going to just move 30 cents and 40 cents. Remember we used to buy it for 40 cents, Trent? And it went to like 60 cents. We were excited, like, whoa, we're up 50%. How about seeing a real move, like $5, like we see on stocks? Well, we get those these days. So, so bottom line is, this is the level on the VIX that you should be looking. And by that time, the market will have hit where? Can somebody tell me? Once the VIX gets towards 20, where would the market be? I've already explained that on just in the past half an hour. Quick, somebody. Where? Yes, that's right. The market would be around 27.20, 27.40. Thanks, Scott. There you go. Because everything is correlated. Good answer. But the market would have completed that first leg of the pattern. If the VIX breaks below 20 and goes back to where it started, it's, you know what this looks like? This looks like dry ships when it went from $11 to $144. And we traded a good bunch of it. This was what, 2 years ago? This is what it looks like. And this is where the manipulation by the CBOE, by some players of the CBOE, came into play. I'm sure they did. Doesn't matter. You know. Everyone's there to, make a fast buck. But this was a real fast buck. So this is like one of those stocks like gone wild. Like when we were doing those, when we were doing the, what do you call it? Blockchain stocks. They just runaway trains. Well, this is what it looks like. So at this point, there's a good chance the VIX comes back and revisits that level, which was around 18. And by that time, the market would have hit the next pattern, which was in that low 2800s. So that's it. That's a read on the VIX. Now, saying it's because it's a derivative, it also tends not to follow any patterns. Like we can study patterns and stuff on stocks, and we're right. We can high probability trade. Here, we could wake up tomorrow morning, some crap happened in Japan, and we could see the VIX go straight up again to back into the 30s. Trust me, it can happen. I don't want it to happen, but it can happen. So, but this downtrend line at 34 is critical. Any movement of the VIX, sudden movement above 30, you can buy VIX calls to about 34, 35, because the markets are so nervous right now, and so are investors, that they would be apt to panic and start selling their stocks and stuff like that, which would drive the VIX up real quick. So I'll be keeping a very close eye on it. One of the smartest guys who was on CNBC today, some gentleman I was listening to quickly, I even mentioned that he's a specialist on this volatility trade. So they asked him the final question. They asked him, so what would you like to do with the VIX right now? He goes, I'd be doing the short the vol trade, meaning he would be buying the crazy XIV or short the VIX. I'm like, wow. But the guy's real smart. So short term, he's looking for the VIX to go down. Short term, we're looking for the market to go higher. Makes sense. Makes sense. So that was good to hear on the other side. Look, we're tactical traders here, long and short. So given what happened in the market, and I mentioned this the day, 2 days after that, or the day after, overall, there's been a structural break in the market. And that can be seen in the form of this. I want to show you the weekly chart. I forgot to do that. This is the weekly chart of the S&P 500. This line has not stopped going down. We're starting to climb over the 20-week moving average. All the lines are still trending higher. Very good signs. Very good signs. Not complaining about that. They're still trending higher, right? You guys see that? This is the weekly. This goes back from let's say March of 2015. But look at this. Simple stuff. I don't see any turn yet. And in August, it had reached this level here, which is 35, and we're at 41, and then it started to turn. So is the market trying to tell us that it's got still another 300, 400, 500 points before it washes out? It's very possible. Unless you see you can do all kinds of short-term trades, but if you want to stay on a swing trade, like yes, we are going to go up to that 2760 level, maybe 2800 on the S&P 500, then you can buy some strikes way out, 3-4 weeks out, right? Or at least 2 weeks out. But now keep it close to the vest, guys, because you don't know what's going to happen, overnight. So on this chart, we haven't reached this level, which I've drawn as a possible inflection point, because this is very similar to August. We're not there yet. And if we get down here, that means if we crash all the way down here, what do you think the market's going to be? We're going to go back and retest that 2500 in a flash crash. And that's going to bring this diving down, kamikaze diving, and that's going to create a significant bottom. So is it possible we do another retest? The charts are not showing that, but the internals are giving us mixed signals yet. Is everyone clear about that? Yeah. So we need to get down here, or from here. Remember, this is another inflection point, and we already are there. slightly below that. We need to turn. I see this weekly turn. I'm going to be like, yes. Because when you see a weekly turn like that on a weekly chart, and you see the full stochastic turn like that, you can stay long for weeks. I don't make this up. You just look at it. You can stay long for weeks. This was elections. You saw the turn. This was 1 week, 2 weeks, 3 weeks, 4, 5, 6. You could stay long for 6 weeks. Wouldn't that be nice? Knowing that for 6 weeks the market's going to go higher in between volatility, up and down. I mean, in between, intraday, some volatility. But yeah, but that all depends on these lines here, and I haven't seen that crossover yet. I'd like to see that. In order for this to turn from here, we need to get a very powerful move higher, another 300 to 400 point day, what we call a breadth thrust. I mentioned that term before. It's a very powerful thrust that allows the internals to cross over up on the weekly. On the daily, we're already starting to see that. I've already shown you that right there. So that's a good sign. On the daily, we see that. I'd like to see that on the weekly. But there was so much damage done here that the weekly might take a little bit longer. But if the daily keeps on crossing over and continuing higher, then the weekly will be pushed higher. Everyone understands that?
Mm-hmm.
Okay. Now we're going to take a look. Thanks for reminding me. So if we look at the IWM, let me clean out this. The same thing is happening with, let me clean out this drawing here. Perfect. So the IWM, as you know, the U.S. small cap growth was actually weaker than the S&P 500 yesterday. In fact, it went negative yesterday at one point. However, if you look at the internals on the daily, it certainly looked pretty damn good. It's looking just like you saw on the S&P. You crossed over. It's a damn good sign. It held the 150-day moving average. I like it. The standard deviation, or the distance traveled from the 50-day moving average, is wide. There's probably a 4 or 5 standard deviation. If it wants to hit that, that's 153. That's a lot. That's a big move. What's the negative here? The negative is because of the body blow that the Russell 2000 took. A lot of small companies got hit harder, right? During last week. The 20-day moving average has crossed over slightly over the 34-day moving average. Is that like a death cross? No, it's not, but we have to watch it. So at this point, if you want to trade the IWM, you just have to look at the last supply point where they hit it hard, and that's at 150. So here's your here's your wide trading range. If it can break up over 151, it's going to get there real fast. So I trade mostly the RUT, and on the RUT, it's looking good. The 150-day moving average was held at 1483. We're at 1494. I'm looking for a trade up to 1517 to 1520. If we start to see a move above 1517, 1520, we're going to basically make a very sharp move. And that very sharp move would be somewhere in the, you can see that yourself. 50 moving average, and so right there. So here's your uptrend line. Can we break above the uptrend line? Anything can happen. But I like it. I'm long the RUT. But whatever you do, you got to track the charts, because there's no because. The markets are fluid. They're volatile. The machines have completely taken over. The retail investor, the retail trader is so frigging scared, they don't even look at anything. So when things are fluid, you can't expect that the charts are going to work flawlessly. They will work, but they will only work if you keep an eye on them, take a quick peek at what I'm tweeting and posting up there. If there's no fundamental changes on the swing trades, where you would be looking at the 4-hour and the daily charts, Especially if you're doing a real swing trade, you want to look at the daily charts and see if this line is continuing to go higher. So regardless of the fluctuations during the day, if the line keeps on going higher, you want to be an incremental buyer on pullbacks during the day. But aside from that, there's no easy answer. Okay, two other quick charts that I want to show you guys. Bear with me 1 second. That has to do with the market, so you guys have an idea what's going on. By the way, congratulations to everybody who held on to FOSL. The stock was recommended between $7 and $8. I believe it's at 17 now, close to 17. Congratulations to everyone, and the lottos that were recommended today. If anyone bothered buying them, they are feeling great tonight because they were around $1.50. They'll probably open at 10. And for anybody who didn't buy it, well, if you don't want to be in the game, feel free to look at somebody else just making the money that you could have made and punish yourself. It's fine with me. And this is what happens in the market. FOSL's chart was fine. I was showing that once a week or so. The long-term charts didn't change. The stock was slowly moving higher. Things, this is FOSL's chart, which I'd shown way back. Just like that. The lines were drawn. I showed you guys this. There you go. Okay? In fact, I'm going to retool it now. And I have to show this. Hold on. This is your weekly chart of FOSL going back to, and I don't care about FOSL. It's July of 2008. So I looked at the chart. There was a news flow that FOSL was putting themselves up for sale. I looked at the chart. I said, hey, that's a great risk-reward play. So what I did was I didn't even look at the weekly. I actually drew the Fibonacci retracement from 120. Forget it. I did the Fibonacci retracement from, I believe, the 50. Yes. Because why bother? 139. Stock was $139 stock. Okay. So I think I did it like this. Bear with me. And I said the first move on the Fibonacci would be 1639. Please look at your screens after you finish today. It closed at 1639 after hours, after hitting 17. That's why it's so powerful, these Fibonacci retracements. Okay? I looked at it from the last previous high, which was $52. I drew this. You can make these things up, guys, okay? And the first level of engagement is 1639. I don't know exactly what FOSL said in their thing. I don't know how short the stock was. I'm going to look at that stuff tomorrow. But if this, whatever the CEO said, if this is as positive as the street took it, and if there's a large short interest on the stock, I can assure you, 1 second, that this stock is not going to be sitting at 1639. It is right now here on the 23.6 Fibonacci retracement. And for all of you who didn't buy it, learn a positive lesson that things just happen. And what's the other thing that happened that's up $30 right now that I kept on saying was going to happen? And I kept on saying just push out the calls and keep some. Can somebody tell me? Aside from Trent? Of course you guys wouldn't tell me because you don't own it. Chipotle. How many times did I post that the new CEO... Look, I'm not a just technical guy. I understand this crap, okay? I worked 14 years from 7 in the morning till 10 at night. So it doesn't matter how smart some of you guys are. In fact, you guys are a lot smarter than me. You'll never know the smartness of and the cunning and the games and the manipulation that are played on Wall Street and other financial circles, not just Wall Street. That's where I'm high and mighty over all of you. And there was nothing really games played. They said they're going to hire a new CEO. And the minute they hired a new CEO, it didn't matter. It could be your Uncle Joe who's lying around there drunk. And they said, oh, I'm going to tell Uncle Joe is the next CEO of Chipotle. Chipotle get at least a $5 bounce. You know why? The Wall Street would be like, whew, finally some CEO went there. And it's Uncle Joe, Trent's old uncle. I'm just kidding. Okay? So it doesn't matter if it was drunk Uncle Joe, but it happened to be the CEO of Taco Bell. The man who basically turned around is just a master of turnarounds. And boy, is he going to take Chipotle stock a lot higher. If you think this is it, this is the beginning of the restructuring, because nobody in the world, at least nobody in the world, I mean, I'm sure somebody in Wall Street knew, but out there, nobody thought that the CEO of Taco Bell, one of the most successful franchises in the United States, in United States restaurant history, is now taken over the top position at Chipotle. God bless America. Okay? So that's another stock that's majorly in play. So whatever you think, whatever your opinions are, just shove it. It doesn't mean anything. All you need to know is that Taco Bell CEO is running Chipotle, and he's going to make some big surgical changes in the company. Maybe it's the same thing with FOSL. But one thing for sure, FOSL is in play big time. So 1639, the stock has a big fat gap. See this big fat gap right here? That happens to be the 38.2 Fibonacci retracement. That's at 23. The stock will go to 23. Now, some of you might think, whoa, if it doesn't go there but in 2 days, Frank's an idiot, the charts don't work. No. It might take a couple of weeks. So what? Buy some March 20 calls. They're probably cheap. They're probably not as cheap as it was at 4 p.m. today or 3:30 p.m. today. But they're not going to be as expensive as a frigging Priceline call. But that's where it's going. Now, if you zoom out, then you can see that it's got room to move to the 150-week moving average. That's at 32. Now, the stock really is in play for on the sell block. Then you can expect an outside company, big company, to buy out FOSL if they're restructuring very nicely inside. That's where the stock got such a boost, to be bought out somewhere around $30. Just giving you money in your pocket. So if you have, if you guys really want to make some real money, be involved with the stock after what happened tonight. Stock prices don't go up like that. A stock doesn't go up 100% after hours unless something dramatically happened. Do you guys understand that part? Yes, no, maybe. Okay, fine. Let's take a look at Chipotle. And the best part is, there's absolutely nobody on Wall Street who likes Chipotle other than this lady who has a $400 price target on it. That's the best combination. That's the reason why I love buying companies which are way down there, like VMW that we bought, and it's up a lot. Entry price on VMW was between 108, 109. Stock's almost at 120. 4 days, guys. Okay? This is the crash lows, 110. Buys were initiated all the way from 112. Buys were initiated around 108, 109, not exactly at the low. Stock's at 120. This is one of the best looking charts. Clean candles. Clean candles. Beautiful crossover. Daily. Fibonacci retracements. 50-day moving average at 125. May I ask an honest question to people who are here? Does anyone own VMW? Calls are not cheap. I mean, expensive at all. I initiated the buys around $1.70. 2, the Feb 16 ones, and then I rolled them out to Feb 23. They were $1.70. They were at 5 today. Just a quick question: does anyone own VMW? Trent says you own the March ones. Yes. Okay, great. No one else. Feb 23. Good. I'm happy to hear that. I'm really happy to hear that. Good. Stick with it. This is a good looking chart, and I believe the stock goes to 127, 128. These are the ones which, when you look at it from a chart perspective, and not just intraday moves. Intraday, it's negative sometimes and it's moving. It starts to give you some real confidence. This is a good confidence trade that you can, in confidence, like we used to before the algos like totally gobbled up the goddamn market, where we could just say, okay, we're buying this, and in a week to 10 days, it's going to slowly move higher. This stock's moving as if nothing's really going on. Yes, it did the crash and burn with the market. Or else it wouldn't have fallen below the 150 moving average. And now it's very nicely moving higher. So looks like we have a good solid 7 points, and the likelihood that Dell does do some sort of private buyout, meaning that they will take VMW private. It's possible. So if they take VMW private, then this kind of crap happens. Remember when the rumor came out? Just went berserk. And then the news came out, Dell's thinking about it, and this happened. So realistically speaking, before that Dell rumor, the stock was trading at around 130, right? So it's going back to 130. So you got 10 points here. That's a lot. So, yeah, we'll do that in a quick second. Boeing was actually quite strong, then gave in. So it was, it was very strong earlier on, and then it started to seep back because most of the money started going towards the techs. But we'll take a look at it. 1 second. So I'm going to show this quickly because I'm going to put this out tomorrow. This would be a fantastic swing trade now that things have changed. So all I'm going to do, and you guys can do this, this is short term. I'm not talking about its all-time high was $800, right? Woo! All right, let's go here. Let's start from the top. Let's start from the top and go to the bottom when the stock was 36. You do realize that Chipotle was one of the biggest money makers in U.S. Wall Street history for investors who bought into the stock back 8-9 years ago. The stock went from 36 to 758 over, of course, many years. So at this point, the stock is going to go above 300. So let's take a look. It 402. I'm going to do the daily. So basically, at this point, the target number you're looking at is $402, all right, which is the 50-day moving average. That's a swing trade. Probably happens a lot faster than I think it's going to happen. The first level of contact will be 320. The stock is up about 30 points right now to 280, 290. So even if it's 320, which is your or 310, that's your 50-day moving average, you still got 30 points from here. All right? So this is worth the terrific chart. Remember one thing, a CEO like that doesn't just come in and sit on his butt and do nothing. He starts doing dramatic restructuring. That's what these guys do. Structuring right off the bat. I bet he changes the menu. Bet he gets rid of the rats falling off the roof. He gets rid of all the bacteria, and I'm just kidding. I mean, whatever he's going to do, he's going to take some dramatic moves. Okay? And so get ready for some big time news coming out of the company starting March 5th when he takes over. So this stock is back in play finally. Boeing's just fine. I'll show you why it's just fine. There's absolutely nothing wrong with Boeing. It was just like, random hedge funds trading back and forth. Boeing's it's about to cross over here. That's a plus. Let me just zoom in. There you go. It is creating what we call a triangle consolidation on the daily. Remember, Boeing's Boeing. There is not a single sign of any red candles. It basically hit the uptrend line. Okay. In this morning, 300 calls were 20 cents. Yes, I know. So yeah, I thought you were talking about Boeing for a minute. So bottom line is, so you have, well, what about FOSL stock? I mean, you could have bought one at $1.50 and sold it tomorrow at what, 8, 9, 10? Trust me, that's the stock market for you. All right. So here we go. So Boeing's totally fine. There's nothing wrong with it. The volume was light today compared to average volume, which is around 7 million. Volume was only 4. There's nothing wrong with Boeing. What we'd like to see is a sharp move above, like it tried to do at 348, just like that. And the chart of Boeing that I use to trade, so basically at that point we're looking at 355. The chart that I use on the Boeing side is this. There. Okay. So I am looking at a number which was the previous high on the 17th, not the all-time high, but the previous high on the 17th of January, which is approximately around 352. Upper Bollinger is 356. So it's fine. I mean, you'll see fluctuation. So, but there's nothing in the chart itself that I can see. One second. That I see wrong. One second. Yep, nothing wrong on the stows either. Just light volume, back and fill. All right. Any other quick ones? Because I got to wrap up. It's 10:30. I have a couple here, so I'll show. So here's your Google. You need some real juice in Google here, but Google's just Google. All of a sudden, it's going to be up like 14, 15, and just keep on running. So you always have to be in there ahead of those type of moves. So this is looking good. Big volume today. Very nice. Look at that. Very nice. I'm sorry, that was not today's. My apology. Stows are looking fine. I'm expecting a move to get back on this uptrend channel, and that's around 1091. Of course, the upper gap at some point will be retested at 1130. This is very good. This is nice. So nothing wrong with it. MELI, keep on telling you guys, this is the second. This is a 3-candle move happening in front of you guys. All right, 1, 2. There'll be another candle, and it's going to hit 377 probably tomorrow, because the stock goes up by 8 to 10 on normal moves. Very powerful. Always diversify the way be a chart trader. Don't fall in love with the name. Don't care what the company is. Just look at the charts. If it's a real company, I'm showing it. Get something, So MELI's looking really good. Generally speaking, if it fills the pattern, you're looking at the stock going back to 392 to 400. A lot of juice left on this one. Twitter, beast. Told everyone to keep buying it yesterday, and I hope some of you did. And if you didn't, then you're crying, or you should be crying, because you could buy all day long as the stock was going through a systematic, selling by some hedge fund. Remember, there's a lot of stuff going on in the market. Don't always look for a reason. And this was getting deeply oversold. Nothing was wrong on the other side of the charts as long as the stock held 29.67. That's major support. And today is today. So congratulations to all Twitter holders. BIDU's up big. Yes, sir. I saw it. It was too late to post it. So I'll show that. What else do I have here? Apple. That's Trent's little teddy bear he goes to bed with. Apple. Trent, you eat an apple every day? I should eat an apple every day. This is looking good, but it's also hitting a major resistance here at this breakout level. Remember, this was Apple's major breakout level right there, this line. See that? It broke out on 30th of October 2017. Fell below that, and now it's going to get up. So over, it's got to bust and move over 165 or just be a seller around that level. That's why you have to follow charts. Best case scenario pattern completion 167. That's it. Trade it. This is moving higher. By the time it gets up into the zone of 165, 166, this will become heavily overbought. You want to be a seller. I don't like shorting Apple because these guys are beasts. It can just bust and move after coming down maybe $1 or $2. All of a sudden wakes up and just rips higher and then goes straight to this upper gap, which has been filled several times, all the way from the 3rd of November to 171. It can do that. Nothing here. Showed you guys this. Twitter. Okay. BIDU. I actually have it up here. 1 second. Gentlemen. And after this. But boy, it's been exhausting. I'll tell you that. All right. So here's BIDU. This is BIDU after hours, okay? Stock is up almost, it's up. It's up almost $12, I believe. So it's here. It closed here, 237.22. So look at this carefully. BIDU's numbers were very strong. I don't think they're going to fizzle out the stock first thing in the morning. You never know, but I'm just saying. So this chart was drawn months ago. So looking at what I've drawn, I don't need to tweak it anymore. 246 puts BIDU firmly in the uptrend zone. And that will bring the stock, and 246 is 13, sorry. Where's the stock right now? 246 is $9 from here. Stock is in play. We got 3 major stocks in play, guys. Chipotle, FOSL, BIDU, and then the rest of the stuff. But these 3 things in play, these are big names that the hedge funds trade. We're back in. Okay, so this one is that's it. Once it goes over this line here, which happens to be 246, then this uptrend that was broken is no longer broken. So the stock can at that point creep up to 262, where the big downtrend line hits. Got a lot of room to move on this swing trade. Okay, Tesla, the beast, which just is Tesla was very strong today. Now remember one thing here. You don't always have to wait on my alerts. My charts are out there. Use them to trade on your own. There's a bunch of times I'll be trading some stuff and I don't post them because I can't post everything. So use my charts to do what you need to do. So this one, for example, because it's not physically possible for me as the sole content provider here at Clue Trading to post every single one of these alerts. Because when things are moving, a lot of things are moving, right? So do what Trent does. He picks up a lot of his own ideas. He runs with it. And a lot of other members do too. So I encourage everyone to do that. So here's your trading chart on Tesla. 150 SMA, 1 hour chart. That's a trading chart. 332. Now the one that also works for me is the one that I use on the quad platform. And that looks different, but this is good enough to think or swim. All you got to do is just draw some lines based on the levels of demand where the buyers came in and the levels of supply where the sellers came in hard. And that's exactly how you trade Tesla. And then you look at the patterns. But this is the easiest way to trade Tesla. So here, I'm going to just put you got 332, 336. This was the free fall. So pattern symmetry dictates that if Tesla decides to really run, there's nothing here in resistance before 332. 332 is $8. Very decent. Tesla calls are reasonable and they move. They don't sit around those biotech frigging options which just sit around and you're trying to sell them and there's no market for it, and then all of a sudden one day just explode higher. That's a different ball game. These are good trading stocks. So this is where you are. Pattern completion happens around 355. 350. So these are the levels: 332, 336, somewhere between 345 and 350, and then 355 to 360 or 362 as a max move. Now, I don't know what exactly is going on within Tesla, but they always have something up in up their sleeves, right? Now, here is something else that happened here that I just noticed on the 1 hour. I should notice it before. We have a crossover of the 34 over the 50. It hasn't happened in a long time. The last time it happened was here, and it was kind of shallow. And the stock went from 345 up to 360. Here is happening again. And one of the things you guys have to watch, one final thing I'll say tonight, when you're looking at charts, you start to see, when an institution is in it hard, all the candles are very symmetrical. You notice what I'm talking about, Trent? That's systematic institutional buying. And I noticed that very clearly on my quad platform, which I highly suggest all of you use. You don't see this type of systematic buying. Here it was more erratic, right? So there was retail traders and things and whatever the case may be. But here, systematic buying, algorithmic buying. That's a good sign. Some fund is buying the stock. So it's back in play. It's a good looking chart, but Tesla's Tesla. You got to watch this thing. It hits those levels, bang, it starts to sell off. So it's not like, oh, it's going to hit that level. I kind of wait for you to sell it. It hits that level. So if you want to pull out some sell limits out there, and throw it out there, maybe $2-3 higher on the options, feel free to do that. It gets hit, you're taken out. Otherwise, just keep an eye on it. So far, so good. All right, guys, going to wrap it up. See you guys tomorrow. So far, looking good. Futures are up about $1.50. Tomorrow is a very important day, economic 8:30 number. Hopefully it's not a crazy number. We have the CPI data coming out. That's a consumer price inflation. A lot of big players on the bond side are watching it. If we get a really hot number, which I don't think we will, but what the heck do I know? If we get a really hot number, markets initially will sell off, then recover. So I hope we don't get that number and futures open down 20. None of us want that, right? So, but get ready for some volatility after 8:30 a.m. before the market opens. On that note, have a great evening. You guys have been great. It's been the way I look at it, it's not necessarily good or bad. I felt like crap after everything that happened last week, right? Certain times, even though I was making some trades that were working really good, it didn't matter. And the crappier I felt, the more I got hungry. Okay, it's like that. What's her name? What is she? She's not a skier, or is she a skater? Chloe Kim, like she termed the term hangry, hungry and angry, right? I saw it on one on one of these supercars at a car show a couple of weeks ago. I'm like, what's hangry? The guy's like hungry and angry. He's driving a what do you call it? Nissan GT. And hardcore car, one of the supercars. Hangry. So there you go. Be hungry and angry. So thought of it and looked at things, and now, like I said, doesn't matter what it is. These are all learning experiences. Have a great evening. You should get a shirt saying that, yes, Clueless 8, tactical, not emotional trading. Stay hangry. Yes, I certainly will do that, sir. Have a good evening, and I'll see you guys tomorrow. Good night.